Now, tenant demand is really the Achilles heel of any office market. It's very difficult to predict. It can go up and down very quickly. In fact, what we found in the last cycle is that the demand for office space has turned around so quickly that it's actually led the economy. It's led the official movements in unemployment and labour force surveys. So understanding what's happening out there in on the coalface of the leasing markets is very important. We're very lucky to have people in our company who are out there doing the deals in the marketplace every day. And I'm thrilled today to invite Campbell Tate to the stage to talk to us about the office leasing market. Thank you, Campbell. Okay, now Campbell, we've noticed that some of the business sentiment surveys are now starting to pick up. The NAB survey, for example, recently shows sentiment rising. The ABS labour force survey was a bit more positive the last time around. Are you seeing this sort of sentiment in the actual leasing markets in the deals at the moment?
Yeah, look, I think we are, Kevin. Particularly in the last 3 or 4 weeks out there on the street, I think you could say that activity has certainly picked up, inquiries picked up. Is that translating into deals yet? No, but will it? Hopefully. Yes.
Was there any sort of pattern to the renewed inquiry? Are there certain industry types who are demanding space at certain sized areas? Is there any pattern to this pickup?
Yeah, look, I think if you look at the industry groups, I mean, the energy sector has been one that's been particularly active. And, you've got Origin Energy just committed to 13,000 metres at CDOP in Milton. You've got Santos talking about taking another floor in Turbot Street. British Gas talking about taking more space. On the smaller end of the market, you've got 300-400 metre tenancies from the energy sector all starting to make noises about taking additional space. So if you're going to put your hand up and say which sector's sort of leading the market at the moment or where's the inquiry coming from, you'd have to say energy, which I believe is flowing into a bit of the resources mining sector as well.
Mm-hmm. Okay, I mean, there's been a lot of talk about soft tenant demand, rising vacancies, falling rents, etc. But some owners have actually been quite successful in keeping occupancy high and managing their tenancies. What's the magic ingredient at the moment?
Well, I suppose if you look at the CBD and you look at the majority of deals that have been done in the CBD this year, or the activity, I mean, it's really been in the B-grade market where the majority of the activity is. It's been now, is that flowing to the A-grade market? I think it is. But the magic ingredient, as much as it may hurt some people sitting in the audience today, is incentives. I mean, to get a deal done at the moment is requiring big incentives. If you've got vacant space, a tenant going to a CFO or a CEO, cap in hand for X amount of dollars to fit out is just not happening. It's having to come, as part of a deal, it's having to come from the landlord.
What sort of level are incentives at now? What are the indicative level and what are they actually made up of? Look,
we are seeing incentive levels, around the 20 to 30%. In fact, we've even seen them as high as 35% in some cases in the city. And near fringe, and predominantly if you've got a vacant space, that is made up of capital, enabling the tenant to fit out that space. And the majority, if there is any, depending on the lease term, of course, can be taken as rent abatement. So, unfortunately, capital is hard to get at the moment. It's hard to find, but it's what you need to do deals.
Mm-hmm. Okay, what about sublease vacancy has probably been the key to the rise in total vacancy in this cycle. There's been a contraction in the demand side, which has surprised everyone, and I guess we had the supply issue in Brisbane, but there certainly has been contraction and creation of sublease vacancy as well. In other parts of the country, we are actually starting to see some of that sublease space. Deals are being done in that now. Some companies are actually saying, well, we're going to need that space again sooner rather than later, so we're going to take that off the market. What's the current situation with sublease vacancy in Brisbane?
Yeah, look, I think the sublease vacancy is a concern for anyone out there that is trying to market direct space at the moment. Our last count was close to 50-odd thousand square metres of sublease space in the CBD and nearly 15 to 20,000 sublease space in the fringe. So it is a concern. I mean, when a tenant or an organisation decides to sublease their space and goes into cost recovery phase and decides to dump the space, it can be very hard to compete against that with the direct space in the building. You're seeing examples of that in the city now, where you can get into, premium or good A-grade buildings in Eagle Street for sort of $400 a metre. So it's very, very, very competitive.
Okay. So I guess the other feature of the Brisbane market in the last cycle was the emergence of the near city. We've seen some very large buildings, very high quality buildings built in the near city of a type that that market hasn't seen before. And it attracted a number of tenants out of the CBD. But now that rents have fallen in the CBD, do you think tenants will be tempted to move back into the CBD, or how will that dynamic between the near city and the CBD play out?
Yeah, look, I think in sort of 2007, when the city was sort of $800 a metre and the fringe was $400 a metre, there was a real push, for tenants, I suppose, with a vacancy rate of 0.6% as well, I might add. There's a real push for tenants to go into those fringe markets because that was a natural progression. There was no other space for them to go into. So, but to answer your question, we haven't seen a massive flux of tenants wanting to come back into the city that now those deals are there. There's certainly some tenants that will follow the deals into the fringe or into the CBD, but no, there hasn't been a massive rush back into the city.
Okay. Right, so looking ahead, how would you summarise some of the best leasing strategies that owners could adopt in 2010?
Look, I think it's just important to take your opportunities. I think you need to be creative with your deal structures. Example, look at taking out a lease tail or the end of a lease tail, for example. If you've got a vacant floor, look at fitting it out. Look at picking up a make good as part of your incentive package. Don't just follow the market. Really lead the market if you're wanting to be successful in the next 12 months.
Yeah. Okay. Look, I think that's a good point to sort of summarise and say, lead the market is a good theme for leasing strategies in the year ahead. So, thanks for your insights today, Campbell. Please join me in thanking Campbell.
Thanks, Kevin.